What up, guys? Welcome back to World of Two Comic Club. Justin here, and today I want to talk about two stocks that I'm buying in December 2018. So I'm going to drop a couple N-words on you guys. Actually, that sounded really bad. I should have rehearsed that first. Two stocks that start with N. These are probably stocks probably could have guessed, but they're Netflix and Nvidia. So, a lot of people talk about these stocks all the time. Netflix is one of the FANG stocks. I would also throw Nvidia in there. But the main reason I want to talk about these two stocks is just because of how bad they've been getting hurt with the recent sell-off with the technology sector. And, a lot of that has to do with just macro economic conditions like the trade tariffs and all that stuff, the Fed interest rates, stuff like that. Not really anything in particular with the companies. There's a couple things maybe that hurt each one, but overall, I do think at the current price, and I'll show the chart in a little bit, I think they're both very attractive. That's just my personal opinion. Again, I'm not a financial advisor. This is not investment advice, just a disclaimer before I start. But yeah, so let's just start with Nvidia, because I'll post the chart here. They took a massive hit with this recent sell-off. They were as high as $289 on October 1st, and they dropped all the way down. I can't remember what their low point was, but they started to come back recently, but they were like 120s, 130s, they were low compared to what they've been. And just looking at their PE ratio, again, this is something I don't always look at, but unless it gets really, really crazy high, I do kind of look at it now. Before, I never, ever looked at it. And you don't need to if you look at the chart carefully. If, let's say the trend line is like this, right? The stock's going like this, then it starts to go like this. You don't really need to look at the PE ratio to know that it's getting pretty high. So with that said, though, it is good to at least know what it is, because then you can kind of see, okay, if it gets to this certain level, I want to get in, and it kind of helps maybe organize your thoughts or whatever you want to do with it. But let's just talk about it. So Nvidia's PE ratio currently, according to a couple different sites, one has at 22.45 and one's at 23. So right around, 22.5. So not too bad compared to what they've been. Oh, sorry about that. Yeah, so they're not as high as they used to be. And let's see, their PE ratio on October 3rd, when their stock was at a high point, was 41.92. So it's almost half of what it was just 2 months ago. So, just based on that, it's looking pretty attractive. Also, the price target, analyst consensus, according to a couple of different sites, one has it at $230 per share for the next 12 months, and another one $244. So those are really good price targets for Nvidia, and I do believe they can easily get there. Let's see what else we have. Okay, so I want to talk about their earnings, just kind of talk about why I think they could be coming back. Not just because their stock dropped a lot, but let's just go into their last earnings report. They did have $1.84 earnings per share, which was above the estimates of $1.71. It did exclude certain items. I'm not sure which exact items they excluded from that, but their revenue for the last quarter was $3.18 billion, which is a lot of money to make in a quarter. Let's just be real here. In the billions for a quarter, that's only 3 months. It was a little bit below the $3.24 billion estimates, but still, that is very, very solid. The revenue did rise 21% year over year in Q3, which is a very good, solid performance. If your company's making 21% more revenue this year compared to last year, I think that's great. Now, the main thing that hurt them was cryptocurrencies. And so let's just kind of analyze that real quick. Basically, in December last year, a year ago, cryptos were hot. They were the hottest thing everywhere. People were buying up NVIDIA GPUs to mine Bitcoin, to mine Ethereum, to mine everything. And, NVIDIA saw this huge demand, and they kind of over-guidanced. That's not even a word, but they overestimated what their demand would be based on that. And as we all know, cryptocurrency just fell off a cliff. Everyone just stopped talking about them. They kind of forgot about them. And I personally did too. I didn't really get really confident with cryptocurrencies after that fall. And it's been taking a long time for them and they haven't even come back yet. So they have an excess inventory of their GPU cards. And that's that kind of hurt them. But in the grand scheme of things, I feel like that's just kind of a short-term mistake. I think in the grand scheme of it, big picture, they got a lot of good things going for them, and they got a lot of growth potential in the future. And they don't have to rely just on cryptocurrencies to do that, because let's be honest, cryptos weren't even a huge thing until a year ago. Then it got real popular, but Nvidia was doing just fine before then, and I think they're going to do just fine without them in the coming years. Now, let's see, their gaming business generated $1.76 billion just for the gaming business. That's awesome. It was below estimates of 1.89, but gaming is growing, and I think everyone who's paying any attention knows that the gaming industry is growing, and so this is not something I'm at all worried about with NVIDIA. I do think they will be just fine in the next few years, especially with their, as they improve their gaming cards, as they improve their technology. I did talk about ray tracing in one video before, but it's basically like you can get the most realistic image possible, and you can't even tell the difference between that and real life, pretty much. Yeah, so the ray tracing, I'm super stoked for that. They can finally render in real time. They're working on those cards now, so I don't know, they'll be released pretty soon, and it should be awesome. And okay, data centers segment generated $792 million. A lot of money, and it was below estimates, but again, I believe this industry is going to be growing in that segment. Their professional visualization segment generated $305 million versus $284 million estimate. And that's one of the things I'm most excited about, because it kind of has to do with like their augmented reality, virtual reality, all that visualization stuff. And I think that's like the coolest part of it, to be honest. And I think that is awesome. So that's why I think, NVIDIA is very good. And if you look at the chart again, it just fell off a cliff. I mean, like, it just crashed. And I think a lot of people are seeing how bargain of a price it is right now, and they're buying it up. And you kind of notice it has been going up like in the last week. And so I will be buying. I've been experimenting with some short-term calls on NVIDIA, and I have had some profitable trades. I did post them in the Discord as I made them, but I will talk about them when I get to them in the vlog. And but they've been doing okay so far, and I'm hoping to buy some more in the near future. Let's go to Netflix. Okay, so Netflix has a price-earnings ratio at around 98.87 according to my TD Ameritrade app, 106.35 according to like Nasdaq.com, I believe. So let's just average it out, let's say 102. But compared to what it was before, in October 3rd, it was 135.14, and then September 27th, it was as high as 173.84. And I believe in July, I actually talked about this in a recent video I uploaded, like one of those old ones, but I uploaded it recently. It had a PE ratio in July of 262. So I mean, its price to earnings ratio now much lower than it's been. And so even though it could be high for some standards, I still think it's not too bad, at least to get in now at that number. So I still think it's okay. And let's go to they had a really good, strong earnings last quarter. Their profit was 89 cents a share versus 68 cents a share. They had 696 million new subscribers, or 6.96 million new subscribers versus 5.3 last year, and versus 5.5 million expected by the analysts. Revenue, $4 billion in a quarter. That's amazing to make for any company, considering a company who has such a small price. If you look at their product, their main product is just their subscription. Their subscription is not $8 to $14 a month, depending on if you're doing standard or like up to the 4K version. But compared to cable, it's still really, really, really cheap. And my friend and I were talking about this the other day, that Netflix could easily raise their price to like $20 a month, and I think people would still pay for it. Now, if they jump to 20 from now, that might be kind of like a shock to people, but they could gradually raise it over time, and I think people are still going to pay for that service because it's so good and because they have so much to offer. And so Netflix does have a lot of growth potential still left in them, compared, to other, like to cable and stuff like that. Now, their streaming revenue increased 36% in the third quarter from a year earlier. So that's just amazing. And so, I mean, overall, Netflix is doing very, very well. If you watch Netflix, I'm sure you love it, and you probably watch it consistently. Me and my girlfriend watch it almost every day, and so we love it. I just recently watched the movie The Ballad of Buster Scruggs with my parents like a week or two ago. Excellent, phenomenal movie. It was a Netflix original. The Coen brothers directed it. If you haven't seen it, I would highly recommend it. It got like over a 90% on Rotten Tomatoes. I think it was like 97% or something at the time. I would easily give it over 95%. It was just amazing. And again, they're just doing so many good things. So in their peak price, they hit $418.65 a share at one point recently. I think that was actually in July maybe, but they hit a high price And so compared to what there are now, I think it's a pretty decent price. And so let's see if I left anything out. Oh yeah, their price targets $397 a share to $420 per share. So a lot of analysts do see their stock going up a lot in the near future, in the next 12 months. And so I think that's pretty accurate. I think Netflix can get that high as well. And so yeah, that about concludes it. So if you guys have any comments, please comment below. What do you guys think? Do you own Netflix currently? Do you own Nvidia currently? Are you buying them this month? Do you like them for the next 12 months? I want to hear your thoughts. So please comment below, and thank you guys so much for watching. If you like this video, please hit that like button and subscribe and all that cool stuff. And thanks again for watching, and we'll see you in the next one. Hey guys, thanks again for checking out this video. If you want another way to support the channel, please check out that Patreon link up there at the top. You get access to my private Discord server where we chat about different companies we're looking at investing in. I also post my current trades in real time, as well as news headlines with little mini summaries. And you can also get discounts on any merchandise that we sell, like a shirt like this, for example. And if you want to just subscribe to the channel, I would appreciate that as well. You can just click that black logo there at the bottom. Thanks again for watching, and we'll see you in the next one.